All right, what's up, everybody? Good morning. Good morning. Welcome to the pre-market rundown. Can we get focus? Can we get a focus? I'll wait for the camera to focus here. There we go. Good morning. Welcome to the pre-market rundown. This being our daily session where we go over any and all information necessary to keeping you consistently profitable here across these crazy markets. I'm your host, as always, Adam Holland, stock options expert market strategist. And we're here to go over what's necessary to knock the rest of this week out of the park. Right now, sitting here battling a morning full of adversity, but we are here and we are trucking along. Gonna go ahead, post a link to my Instagram story. You guys know the drill. Hope everybody had a nice, restful, and restorative night's sleep. Not gonna lie, I didn't get that either. I switched pillows. Sometimes you're like, oh, I might switch pillows and see what could it hurt. I cannot do that. Once I get used to something, I gotta stick with it. And then I got up and technology was being combative once again. I went got a new mouse, new keyboard, and that is having issues too. So now I just need to figure out, is the USB port that I'm plugging the Bluetooth receiver into, is that the issue? I don't know, right? But we're back to me using a hybrid of mouse plus trackpad, which is super inefficient. But we're here, we're alive, we're trucking forward. That's all you can ask for. So let me post this on the story. All right. Awesome. Let's see at the link also. Got to get back in the groove of taking my allergy medicine first thing in the morning, y'all. This pollen is hitting. I don't know how many of you are local in Maryland and whatnot, but pollen has been absolutely crazy. All right. Thank you. I appreciate it. Yes. All right. So can we get a camera? Can we get, oh, here's me trying to use the dead mouse. Can we get a focus? All right, you guys. So there we go. Whenever I'm watching myself, it tends to struggle with the focus. But as always, you guys know the drill. We're here to do what? Get 1% better, right? If you can lay your head down on your pillow 1% better than what you woke up with, that was a successful day. You're closing the gap between where you are and where you want to be. And this session will get you there, right? So make sure you throw your one in the chat, whether you're watching live or via replay, to signify your intention to get 1% better, right? Make it plain, right? Write out your goals, make it plain. Acknowledge, your intention to get 1% better. And that way the universe respects that, right? And you respect that. You're not just coming here willy-nilly, like, oh, I'm going to, dibble dabble. Nope. You're coming in here with an expectation, right? And expectations are everything, especially in the stock market game. So let's dive into our news for today with our top story being spotlight on jobs. So the U.S. labor market appears to be easing according to the latest jobs data, but investors are awaiting the payrolls report to be released tomorrow for further proof that the Federal Reserve could end its rate hiking cycle. Jobless claims expected later today will also be closely watched. Note that Good Friday is not a federal holiday. The consensus estimate is for non-farm payroll to increase 239,000 jobs in March, 239K in March versus 311K in February, with unemployment rate unchanged at 3.6%. The payrolls report will be the last one ahead of the Federal Reserve's meeting in May. Fed funds futures show a roughly 60% chance of no hike and a 42% probability of a 25 basis point increase. So if we do get a no hike, this would be the first time we've got a no hike in almost 10 meetings. So that would be huge. They're all saying, Powell is saying that it depends on the data that we get. He did allude to the fact that they might not have to hike at every single meeting now. So we'll see kind of how that shapes up, but it's looking to be, a very impactful FOMC meeting there. In terms of backdrops, markets are expecting further easing of the labor market after the latest ADP jobs report showed a slower pace of hiring. Employers are pulling back from a year of strong hiring and pay growth after a 3-month plateau is inching down, said ADP chief economist Nella Richardson. In addition, job openings declined more than expected in February's JOLTS report to 9.931 million, marking the first time the number dropped below 10 million since May of 2021. This could be the first signs of weakness in the labor market, and that is huge, said Craig Erlam, senior market analyst at Oanda. So without it, the Fed will find it very hard to make the argument that it is pausing the tightening cycle. Now it needs to be backed up, and the jobs report on Friday could start that process. So the Fed needs to see, again, some type of data. They keep saying we need data. Our decisions are going to be data dependent. Further rate hikes are going to be data dependent. So whatever the data says will help impact what they do. So if we do get a strong or we see kind of easing in the jobs market, where we see weakness in the labor market, that's bullish for markets, right? Why? Because the Fed has two jobs: to maintain full employment and keep inflation at that target rate of 2%. With employment being strong, the Fed doesn't have to worry about that. It only has to worry about inflation. If employment starts showing weakness, then the Fed has to start worrying about employment as well. Maybe they say, hey, we don't continue to hike nonstop because now our second job isn't as sure. Oh, need that agua this morning. So, in terms of expectations, Deutsche Bank economists expect March numbers to come in stronger than 250K, which would be the second slowest pace of monthly job growth over the last 2 years. Bear in mind, however, that even though we've had some weak data on the employment side, the January ADP report came in beneath expectations, but non-farm payrolls went on to surge by 517K on the initial estimate. So there's still scope for a wide range of outcomes tomorrow, said strategist Jim Reed. So we really don't know what we'll get until we get it, but that'll definitely be some risk associated with whatever you swing into next week. The market is closed on Friday. Remember that. This is our last day to be trading. So keep that in mind. Whatever you swing over the weekend has 3 days of data that it has to fight through, right? So that's important to keep in mind as well. That's 3 days of, time decay, 3 days of you losing a bit of money on each one of those option contracts. So whatever you swing, make sure that you choose your expiration wisely, because 3-day weekends are important, and make sure that you really like the look if you're looking to swing. Let's see here. All right. So moving on to our next section, talking about securities portfolio sale. The Federal Deposit Insurance Agency hired BlackRock, ticker BLK, Unit Financial Market Advisory, to sell the crippled securities portfolios of failed regional lenders, Silicon Valley Bank and Signature Bank. The face values of the portfolios, mostly comprised of agency mortgage-backed securities, collateralized mortgage obligations, and commercial mortgage-backed securities of SVB and Signature, stood at $87 billion and $27 billion, respectively. First Citizens Bank is buying Silicon Valley Bank's deposits and loans at a sizable discount, while New York Community Bank Corp's Flagstar Bank is buying Signature's deposits and some of its loans. The acquirers had rejected the lender's securities portfolios, as they would have had to realize losses due to elevated rates. So this is just kind of, the ongoing update here in this bank failure saga. The FDIC hiring BlackRock to sell off the security portfolios of Silicon Valley Bank and Signature Bank that it acquired. It's pretty much like Signature Bank and Silicon Valley Bank had crusty assets. They needed to be bought, or else it would cause, ripple effects that would be horrible for financial markets and for banks across the board. So the FDIC went and bought them, and now they have to sell them. And that'll be fun. I'm sure a fun endeavor. Anybody want to buy this broken down hoopty, right? Literally no one, but we'll see. I mean, the financial system is one that seems to literally sprinkle gold paint on top of poop and sell it as 24 karat gold. So we'll likely have the same thing happen here, where this just withers into the horizon and everyone forgets about it. And nobody really knows where any of these mortgage-backed securities or any of this stuff went. But just kind of an update. There's also been news circulating that TD Bank has been like the most shorted bank now. Canadian banks keep a lot of money in cash reserves, and to be honest, like, you can go to the grave shorting Canadian banks. So you also have to look in line with the fact that these banks that are being shorted are also large banks with also large cash reserves. Like TD is like slightly more than Bank of America in terms of short interest, but Bank of America has big cash reserves. So it's like, there are people that might be shorting the banking system as a whole, but make sure that, again, before you get caught up in fear-mongered headlines, you understand the history behind these banks and what you're dealing with. There's a ton of short interest on Goldman Sachs, and Goldman Sachs has a ton of cash reserves. So it's just like people short things and those things not drop. Look at Tesla, right? Tesla did drop, significantly, but there are people that have been shorting Tesla for like 15 years. and they've been getting absolutely shellacked, right? They've been getting worked by that short on Tesla. So I think people think, oh, there's short interest here. This thing has got to drop. It doesn't. It doesn't, right? People shorted Tesla. They shorted Musk for years and years and years, and it has cost them literally billions of dollars. So don't think, okay, just because there's short interest, there's got to be something wrong. There's a number of different reasons why that position could be where it is. And one of them could just be incompetency, right? Now, inflation to normalize. Walmart expects inflation to be normalized or more normalized in 2024 and inventory to fall back toward historical norms as well. It said at its investment community, NAT. You guys know Atom versus technology and Atom versus Nats. Nats are literally the worst. Like, I'll be in the middle of a Zoom meeting and a Nat will fly by and I'm like, guys, we might need to table this and come back because I got to put on my Rambo bandana right now and catch some bodies. Anyways, back to the retail giant of Walmart, right? CFO John David Rainey said supply chains improved considerably along with inventory levels. Bloated inventory levels had been a persistent problem for major retailers for much of 2022. Rainey expects inflation to remain stubbornly high in 2023 before normalizing into 2024. Seeking Alpha contributor Jeffrey Saylor said Walmart is a solid defensive stock in the event of a recession. As a low-cost leader, it should regain market share with any economic softness. It is also riding the wave of inflation to generate higher profits. He said the retailer's guidance is pretty cautious and it should be able to top it in 2023. I just think it's crazy how everybody has all these recommendations that are important for recessions when the recession started last year. I think that's just crazy how we were talking about Walmart beginning of last year, right? We traded Walmart. We held Walmart in portfolios. We were talking about all this last year. And now people are like, this is what you need for a recession. That's like saying this is what you need for a house fire and my house is in ashes. Like the market and just the world in general has a way of coming to you after the damage is done and saying, oh yeah, this is actually what you need to do. Thanks. I could have used that a year ago, right? So what we like to pride ourselves on within this community is not being late, but being there with timely information, right? So moving on to the last headline this morning, Google Chat AI. So Sundar Pichai, CEO of Alphabet, whose ticker is Google, announced plans to integrate conversational artificial intelligence features to the company's flagship search engine following the breakthrough success of Microsoft's ChatGPT. Such advances in AI could help Google answer queries faster. Even though Pichai declined to comment on the product's availability without a waitlist, he made it apparent that Google would keep improving its Bard chatbot and also is focused on adding AI features that will enhance work-related products such as Gmail. Seeking Alpha contributor Growth at a Good Price believes Bard is no failure. Rather, it's an approach to chatbot development that is suitable for Google. Cautious, methodical, and prudent. It helps test the waters with mass LLM deployment without risking its juicy search margins. So, we'll see Bard continues to develop. Sundar Pichai is also one of those, high-profile people that signed on to that petition that there should be a 6-month pause on AI. A lot of people say in order to help regulation catch up and all that good stuff. But to be honest, I think for Sundar, he's just looking for a way to have Bard catch up to ChatGPT because at this point, ChatGPT is Usain Bolt leaving everybody else in the dust, and Bard is that person that trips over themselves during the hurdles on like the first hurdle. So sounds like they just want time to catch up. And we got the battery running low. Need to grab the laptop charger here too. If we do die, it was an amazing session. Everybody have a great time out there in markets, but typically when I get this, I shut down immediately. So we're looking forward to the jobs data tomorrow. This stream might end abruptly. Can we get it? Can we get it? Okay. I think we're good. Woo! We made it. Guys, it has been one of those types of mornings. Boom, boom, boom. We made it. All right. Hopefully, we're still good. We can still keep it rolling. So, in terms of today's markets, looking here, looks like mostly green, kind of just flat across the board. In Asia, Japan, we're down 1.2%, but that's the biggest. Hong Kong, we're up 0.3. China, we're flat. India, we're up 0.2. The footy in London, we're up 0.7%. Paris, we're up 0.4. Frankfurt, we're up 0.4. The Dow is up 0.04%. Why even, y'all? The Dow is up 0.04%, and the S&P is up 0.01%. What the heck is the point in reporting that? They're flat. They're flat, right? That literally that is a waste of time and a waste of computer keystrokes. Whew. If anybody else has allergies, you feel my pain. And then the NASDAQ down 0.2%. Crude oil is down 0.1%. Gold is flat. Bitcoin down 2.2%, back beneath 28K, just barely. Now, we got initial jobless claims data at 8:30 a.m. That's something to pay attention to. Let's see what that jobless claims data is looking like. And sorry for all the sniffling and whatnot. That's the worst, especially here through a high-quality microphone. But here we are. We keep it trucking, right? Let's see what we got data-wise. We're loading, and then we get that jobs report tomorrow as well. So it's really just mainly employment data that was on the docket this week. All right, let's see what we got going on. So U.S. initial jobless claims versus actual looks like 228K versus 198K. Previous estimated was 200K. So the jobless claims were higher than anticipated. We saw 228,000 jobless claims. What was estimated was 200K. So that is bullish for markets, right? Having more jobless claims than expected is bullish for markets. So we might be up off of that news, right? Off of that data drop. That really is the only big thing. We do have Bullard speaking at 10 a.m. Bullard is a member of the Fed whose words can move markets. So if you see volatility around 10, from 10 to 11 or however long he's on, it can be because of that. So that's something to look out for. In terms of what else is happening, we'll finish up here with our rapid fire bullet point rundown. So Tesla, ticker TSLA, nearly triples total workforce in Austin Gigafactory. Amazon eyes reduced stock awards for employees in coming years. Costco comparable sales slow in March. Stock falls 3% after hours. Disney changes streaming heads. Perlmutter speaks out on firing. GSK, ticker GSK, ordered to pay more royalties to AstraZeneca on Zejula sales. Who names medications? Because, I think these people just love tripping over themselves. AbbVie, ticker ABBV, 2023 earnings guidance range below consensus. So AbbVie kind of disappointing on earnings there. Shell, ticker SHEL, updates expectations for Q1 production and earnings. Samsung, AMD renew GPU architecture pact. NVIDIA slips as Google, ticker GOOG, touts prowess of own custom chips. And then AMC up, apes stumble as court rules against conversion settlement. Just in meme stock news there. But yeah, for those who didn't realize, NVIDIA was down yesterday, and it was because they came out and pretty much said, hey, our chips crush it and NVIDIA chips suck. And NVIDIA took a dive right before market open and was struggling a bit yesterday. So that's kind of where that all came from. But that'll wrap us up here for the pre-market rundown this morning on April 6th, 2023. Thank you for the bless yous. I appreciate it. All the sneezing. I appreciate the bless yous. And I appreciate you guys for being here, investing in yourselves, right? That's always going to net the biggest return. I don't care what people say. I don't care what they, blurt out. Investing in yourself is always going to net the biggest return. So make sure that you aim to do that each and every day. Consistency trumps everything, right? They say, hard work trumps talent when talent fails to work hard. All the old adages, they're true. Be in here, right? Try and be in here each and every day that you can be in here, aiming to get 1% better, and you will accomplish that goal. And then suddenly, after the time compounds, you'll see that return on investment within yourself, and it's an amazing thing. So, as always, if you got anything positive, any valuable morsel of information from this session, just show love to these accounts, right? The YouTube videos, the Instagram Reels, right? The YouTube Shorts, right? Show love, like them, comment them, right? Show love to them. I appreciate it. I show up here every day for the free in order to help get us right, get this community revved up to dive into markets and execute. And that helps me in order to continue to do that. So I appreciate that in advance. Sending love, right? In terms of today, it's a slow holiday week. Slow holiday weeks can be weird, can be choppy, as we saw with the action that we got yesterday. Not really looking to push the envelope on anything if we don't see any opportunities that look like home runs, right? If it ain't a heck no, right? Or if it ain't a heck yes, it's a heck no. That's kind of where I'm at. So we'll see if we have anything attractive out there. If not, might not be out here trying to force things, considering the fact that all the institutional money is already hanging out with their family because they don't go to work on short weeks. So everybody, have a great rest of the day. Have a great weekend. Happy Easter. Happy Resurrection Day in advance. Go have some amazing time with your family. And I'll see you guys next week for our next pre-market rundown. Have a good one.